Hi everyone, Ben here. Welcome to the channel. In this video, I'm going to give you a brief introduction on a unique gold exploration and development company called Norsemont Mining. The value of the company is still quite cheap despite a recent run up in the share price. And the company has a project called Chocolimbi, and it's located in Chile. And really, it might be better categorized as a mining restart story with potential to take advantage of already stockpiled ore from previous mining sitting on surface, ready for production, and they could get into processing ore very quickly, possibly within a couple of years. First, I'll give you a few more details of the company's current assets, the potential, and then I'll give you some plans for Chocolimbi. So there is a 3,000 ton per day mill on the property. There are roads, water wells, and power as well. The current resource on the property is 2,570,000 ounces of gold equivalent at 0.82 grams per ton in the indicated category. And in the inferred resource, there is 568,000 ounces of gold equivalent at 0.68 grams per ton. Almost all of those ounces are within 70 meters of surface, and the deposit is open laterally and to depth. The project also has an indefinite presidential decree for exploration and exploitation. So the company will have a simpler time getting back into production. The property has a very bright future ahead of it as well. The resource target is 7.5 million ounces of gold equivalent longer term, with the potential of a $1 billion market cap. There's also potential for a gold copper porphyry at depth that has been indicated with past drill results. There's also a pre-feasibility study happening right now on getting 210,000 ounces of gold in those stockpile dumps into production. Preliminary estimates for the stockpiles being processed are for a $65 million investment, which could yield a total profit of well north of $500 million at today's gold price. Extremely attractive numbers that do not include most of the 2.7 million ounces of gold equivalent on the property that could be in production later on as well. The map of this slide shows some of the property potential with 700 meters of poorly tested zone in between two pits with impressive drill results of 35 meters of 32.2 grams per ton gold on the right pit and 70 meters of 3.6 grams per ton gold on the other pit. Also, lots of expansion potential at depth. The stock has performed extremely well and has rallied 4 times higher over the last 6 months, but the stock still is really cheap, trading at about $76 million market cap, which gives a valuation of about $28.50 per gold equivalent ounce in the ground, which of course does not factor in the infrastructure already there. Also, the CEO and his family office owns 28% of the outstanding shares, so they are certainly well invested in the company alongside of shareholders. I own shares in this company. This is not financial advice. Please do your own due diligence. Thanks for watching, and we'll see you in the next one.